Hello there, you're watching Bizworld. I'm Anita. Prime Minister Datuk Seri Anwar Ibrahim said the upcoming Budget 2023, set to be retabled on February 24th, will take into account the current economic challenges, while at the same time driving the country's growth and attracting more investments into the country.
Umpamanya dalam soal daya saing, soal kecepatan, kepesatan, kelulusan perniagaan, soal beberapa inisiatif atau ikhtiar baru seperti digitalization, beberapa tindakan untuk memastikan pengeluaran sumber asli itu melalui proses hiliran, ya, itu semua kita ketinggalan dari Indonesia, Thailand, Vietnam umpamanya. Hal-hal ini kita mesti depani. Terlambat sikit itu.
The Premier, who is also Finance Minister, said this while addressing the ministry's monthly gathering earlier on Wednesday. He added that the biggest challenge in drafting Budget 2023 is coming up with well-balanced policies that would attract investors while protecting the people, especially the hardcore poor. Despite the moderating Industrial Production Index, IPI, research houses maintain the country's 2022 GDP growth estimate of between 8.5% and 9%. According to AmBank Research, while the industrial output was generally robust last year, the momentum going forward is expected to be affected by softening global economic activities. On the local front, it said the interest rate level remains accommodative, hence it continues to see support coming from private consumption. For the country's GDP, meanwhile, Kenanga Investment Bank expects a sharp deceleration in growth in the fourth quarter, which would bring last year's growth to its forecast of 8.6%. The firm continues to project this year's growth to ease to 4.3%, in line with a tepid global economic outlook. Meanwhile, this year's manufacturing growth is likely to be weighed by weak external demand as the global economy braces for a slowdown and waning domestic demand, especially after this festive period. Also, Malaysia's Manufacturing Purchasing Managers Index fell for a fifth straight month in January. Meanwhile, Malaysia's economy is expected to grow at a moderate pace of 4.7% this year, amidst a gradual decline in inflation, softening monetary policy and subpar commodity prices. ANZ Bank Chief Economist Sanjay Mathur said Bank Negara's monetary policy tightening has sort of come to an end and anticipates that inflation would ease a little more. With that, he opines the combination of growth and inflation bodes well for the country at present time. On the external front, he said the reopening of China's border would be supportive of Malaysia's economy, especially in terms of tourism. Without stating the growth rate for 2022, he expects Malaysia's GDP growth to remain quite respectable following the reopening of its borders. He also expects the ASEAN banking and financial industry to see mergers between conventional and digital banks to competitively serve a huger market. The volume index of the wholesale and retail trade in the country registered a 9.9% growth year-on-year in the fourth quarter last year. This brings the overall performance for 2022 to 14.3%. The Department of Statistics Malaysia attributed the increase to the retail trade subsector, followed by motor vehicles and wholesale trade. For quarter-on-quarter comparison, the volume index increased 1.6%, mainly supported by motor vehicles, which grew by 5.1%. Moving on to performances across subsectors, the volume index of retail trade recorded 19.3% growth. It was contributed by retail sales of automotive fuel in specialized stores with 35.7%. Overall, the volume index of retail trade climbed up 2% as compared to the previous quarter. Vietnam's commercial hub Ho Chi Minh City announced an effort to court a $3.3 billion investment from Intel Corp, only to amend much of its original statement to remove mentions of the US chip maker. According to Bloomberg, the government posted a notice on how it was courting that mega investment from Intel, which could boost the city's 2023 foreign direct investment to $7.4 billion. However, it revised the statement to strike out Intel's name and reduce that projected total to as much as $4.5 billion. Meanwhile, a person familiar with the discussion stated that Intel did recently meet with government officials about plans to make an additional investment for at least $3.3 billion at the Saigon High-Tech Park. Previously, Intel had reiterated its commitment with investment of more than 30 billion ringgit to expand its operations in Penang as well as Kulim, Kedah. That's all the time we have for Bizworld today. With that, I'm Anita. Thank you for watching and stay tuned to TV3.